Our guest for this session is an outstanding student. He studied in Egmore Don Bosco. He should have become a sports star, right? But he didn't. Then for his graduation, he went to Loyola. Obviously, he should have become a cine star, right? But he didn't. Then he went to Madras University. He should have become a government officer. No, he didn't. Then he went to IIMB, graduated and joined KPMG, worked his way up to CIO of Shriram General Insurance. So, let's welcome Sudhakar Raja, founder of TrustScore. It is a human risk and redefining trust in the corporate landscape company. Put your hands together for our esteemed guest, Mr. Sudhakar Raja. Sir, I would like you to introduce the other panel members.
Good morning, everybody. Hopefully, we'll keep this live. It's a fantastic audience. Always wonderful to be back in Rotary. I was in ANET, and I've been in the Rotary literally since I was 7 years old and all the way down here. So, always fun to be back in Rotary. And I'm thankful for this opportunity. And I thank the panelists for taking the time. All of them are venture capitalists and entrepreneurs who have taken the time off during a busy schedule to be a part of our program here. And as a part of the panel, I'd like to welcome Mr. Prem Bharati from Pontac Ventures. I'd like to invite Mr. M.V. Subramaniam from July Ventures. I'd like to invite Gauri Tyagarajan from Credit Mantri. Mr. Arun Karthik from Startup Tamila, part of the Startup Tamil Nadu ecosystem. Mr. Vikesh Kesavan from 8X Ventures. Shrikant Jha from Go Water. So we have an interesting panel here because we got startups and venture capitalists coming here and giving you a flavor of what the startup ecosystem in Tamil Nadu will be looking like, right? So we're going to give you a flavor of, what is the ecosystem looking like. All of you are owners of companies or in higher positions, but what is the startup ecosystem looking like? We're trying to give you a flavor of that. That's my objective when I do this here. So from that perspective, I'm going to ask them to introduce themselves because ultimately no point in me doing any justification to what they do as well. So might as well ask them to introduce themselves. So I'm going to start with, Mr. Prem from Pontac Ventures to go ahead and introduce himself. And I like to keep this short, so we're going to do only 2 minutes maximum per thing. Maximum questions and answers are going to be just 2 minutes. That's the equation that we have agreed upon. So off to you, Prem.
So yeah, thanks for introducing us. And you said entrepreneurs and venture capitalists. I think I'm more an entrepreneur and I became an Action Clear venture capitalist. So Prem, I founded Pontac. We are a UK headquartered fund, venture capital fund, operating in the UK-India corridor. We have been in inception since 2015. We invest on both the sides of the corridor to cross-pollinate technology and advance mankind in the areas of agriculture, financial services, health, and climate and clean tech. So we've done about 120 investments between the two geographies. In India alone, we have invested in about 23 states, 35% of them being women entrepreneurs. So pleased to be here. Thank you.
We'll use this mic. That's fine. That's fine. Don't worry about it. All right. So next, I'd like to ask Gauri. So she's an entrepreneur. I'm going to ask her to do a lot more than just talk about herself. So I'm going to ask you to talk about why you started this business and what is the problem statement that you're trying to solve and your journey from that as well.
Hi, my name is Gauri. I run this company called Credit Mantri. What we do is we help consumers and small businesses to get credit healthy. So which means that and eventually become loan eligible. So we typically, we have close to about 18 million users who are credit profiled on the platform. We work with 50 plus lending institutions and we are headquartered out of Chennai and we are a fintech operating therefore out of Chennai. What made us, so what's the problem we solve for? I think spent a lot of time in banking and financial services. So the problem that we found in my past life, what I found was when 10 people apply for a loan, only 2 people actually get the loan. And we used to wonder what happens to the remaining 8. And the 2 people who got the loan actually got it from multiple institutions. So 8 out of 10 seemed like a large problem. It's the problem of what we call as the credit invisibles, because they were invisible to most lending institutions. And for the lenders, it was wasted marketing dollars because they spent money in sourcing these applications. And for the borrower, it was unmet consumer demand. So that is really why we focused on solving for the credit invisibles, to solve for the 8 out of the 10 rejections that happen in loans. And in doing that, we found there were 3 use cases of why people typically get rejected for loans. It was either they had a black mark on the bureau, they had a past history of not having repaid loans properly, or they had never borrowed before, so lenders didn't have a method to evaluate them, or nothing wrong with their credit health, but simply their incomes were low. So the unit economics of the distribution models that existed at that time didn't really solve for making small ticket loans work. So that is really the problem that we set out to solve for. And 18 million users on the platform, hoping to continue to grow, and 60 plus lenders on the demand side.
Thank you very much. I'd like to introduce Mr. M.V. Subramaniam. He's an interesting person because he went from being an entrepreneur, sold his company, and now is a partner in July Ventures. So, a little bit about your journey, sir.
My journey, right? I've been an engineer in 7 years in the GEC. Then I became a stockbroker. Then I came into building this company called Future Focus Infotech, which I built for last 26, 27 years. Sold the company to a Japanese firm. In the meanwhile, when I had excess money, which I was not spending or not giving it to my wife, then I started investing. In 15 years back, I have more than 20 investments across India and US. That is through Indian Angel Network. Then from there, I just wanted to support Tier 2, Tier 3 city, being a director in Native Lead as a director for last 5-6 years. Then after my exit from the company, which I built, now I become a VC. Now this is an $125 million fund, and that is how my journey is. I'm also part of TN Startup, Tamil Nadu Startup Mission, been a part of IC Investment Committee in SCST fund, which is in Tamil Nadu. So in Tamil Nadu, wherever they call me for promoting the startup or supporting any of the startup, because I have portfolio from a smallest agriculture portfolio to a tech portfolio from IITM Research Park, which is $2.5 billion now worth. So that is how my journey was. It is exciting to be in the startup ecosystem all the time.
Thank you, sir. Now we have Shrikant Jha. He is part of Go Water. So about why you started this company, where are you right now? Kind of a little bit of a story about that.
Why we started it, I'm not too sure, because we met one day, myself and a couple of friends, and we decided that we're going to do something in water. What exactly we were going to do in water was not very clear, but we were very focused on the fact that it has to be addressed because of wastages and the fact that the world is going to be facing a crisis in water. So we started off by bringing a little bit of technology and using it for water transportation, actually, so that people would be able to access water, especially since we come from Chennai. We understood what the problems are as far as water deliveries in Chennai. But going forward from there, what we realized was that a lot of automation is required to avoid wastages. That could be a tank overflowing, or it could be spillage, or whatever it might be. So we started then using sensors and IoT devices and wiring up homes and apartments to make it more efficient, which we did, and that led to us looking at the industrial needs, and then we found that we were actually creating solutions for people who actually had a problem, even though we didn't have a product on the shelf for that. So we started getting a little innovative in that, and today we actually cater to, as OEMs, we install water meters for most of the large builders in Chennai. We do it for a lot of corporates, I'm talking about factories, who have to manage either the temperature or the flow of water. And to cut a long story short, wherever water is, whether it has to be measured, the flow has to be regulated, or it has to be managed, we are now in that space.
Thank you. So next we have a very interesting person here from a product called Startup Tamila. Startup Tamila, they are doing the Shark Tank of Tamil Nadu, if you like. Arun, a little bit about why you came up with this, what is it that you're trying to achieve with this entire Startup Tamila ecosystem?
So first of all, am I audible? First of all, thank you so much for being here. So from a government's perspective, the startup ecosystem has been one of the primary drivers of employment, of innovation, and in Tamil Nadu, we do very good work when it comes to the MSME industry. Our infrastructure, public infrastructure, social capital has been very good throughout. But of course, when it comes to the startup ecosystem, we've not been in the limelight per se. So the government came up with an initiative to have multiple funds to first directly invest into startups. One such initiative is the TAN Seed Initiative, there's a TAN Fund Initiative, there's a Tamil Nadu Infrastructure Fund, there's a SCST Fund, there's a Sustainability Fund. And as a part of the journey, the government also realized under Mr. Sivaraja Ramanathan, they've understood that entrepreneurship has not just a capital barrier, there's also a social barrier, which, for example, starts at home. So when you talk about entrepreneurship, how does an entrepreneur come up with the idea is as difficult as convincing their family to take up the journey along with them. And in that sense, the government wanted to create entrepreneurship conversations, a dinner table conversation. And what better way to go about it than to make it into mainstream media. And one such initiative is this, where today money has become a commodity because it's a means to an end, not the end. So in that sense, there are so many entrepreneurs who have very good technology, and we are sitting in the core of innovation in India and in Tamil Nadu, which is IIT Madras, where so many startups come across with so much potential and so much innovation there. But of course, do they have the right people guiding them? Do they have the right capital backing them? Is something that is slowly coming up. And in that initiative, I think entrepreneurs who are present here could also be a part of the journey, and that's the core idea behind Startup Tamila, which is a first business reality show that is going to happen during the summer.
Great. Hey, thank you very much. Vikesh, so you are part of 8X Ventures. So a little bit about 8X Ventures and what kind of companies do you fund and so on and so forth would be great.
Yeah, sure. We at 8X Ventures are focused on deep tech. And in deep tech also, we focus on few more verticals like Industry 4.0, B2B SaaS, cybersecurity, semicon, biotech, and these are our specialty areas. And we have around 14 portfolio companies as of now, and 2 of them sit out of IIT Madras, that is Solinas and Zymer, building disruptive tech for the globe. And we as a firm believe in deep tech. As you know, we believe that in the upcoming decade, India will become an R&D center and probably sell the product for the globe and slowly pivot into a product-based commodity from a service-based commodity. And we move, as we are funding from seed to pre-series A, we mainly focus on founders, whether the founders can actually build the tech they are telling. And we come in somewhere, in the MVP stage. That's where we come in. And happy to know more.
Great. Hey, so I also double down as an entrepreneur as well. So I'm going to talk about myself as well. So while I talk about everybody else. So I run a company called Trust Score. So we are trying to solve the problem of trustworthiness. How trustworthy are your employees, your part-time workers, your gig workers, and everybody else? Today, India is losing about $100 billion because of the people committing fraud, absconding from employment, doing all that problem. So I myself, for example, I was running a startup previously and I got defrauded by the employees and agents and connivance. So I found this to be a big challenge, and that's the problem that we're trying to address. It was a problem that I personally had, and because of which we started it, and believe it or not, this has been going very well, and I found out that this is a big problem that every company has at the end of the day. So that's where my journey became, and now we have about 200 companies on board the platform. So that's my startup journey, if you like. So, Mr. M.E. Subramaniam, you have actually, been a founder and then, become a venture capitalist. How was it when you left your cushy job? Because when entrepreneurs come in, they're literally leaving their jobs. They're taking a risk, a big risk if you think about it. Right? People are making money and then they're just quitting their job to actually start a company. It's not an easy decision. How did your family take it? How was it in your own aspirations as we go along, sir?
Yeah. The family, I kept it very simple. So whatever they need in the beginning, I kept it for quite a long years. I didn't increase their wish list to spend lots of money at home. That helped me to do two things. Professionally, I was capable of doing some audits and processes. So I came out of the first job, which is in English Hat-Trick. Actually, I got married to her because they said I was working in English Hat-Trick. Otherwise, I would not have got married. But when I came out, I had the backing of a professional exercise, which I can do it for a large companies. With that idea only, I came out. But stock market is always exciting for many people who wanted to invest. I was making not tons of money, but I was making small money where my family can be taken. That time, 10,000, 15,000 rupees. I had my house, which is my father has given, which I was giving some 5,000 rupees rent and 10,000 rupees I had. So that was the first break. But the second break was after I joined this as a partner into a company, and then when I raised money, when I sold the company was little painful. When I was after 26, 27 years, the pain was not I'm leaving the company alone, but there are people whom grown with me, right? So I am leaving them to a unknown culture of Japanese culture. That was little painful, but I have to take a call because they also have to grow. I have to move out. Otherwise, the journey was smooth because being with startup, you are always active right from the morning till night. Somebody will call you and you will learn new things every day. So that kept me awake all the time.
Thank you, sir. Gauri, I know that being a woman and starting a company, being a founder, how did it all go? How did your family take it? How do you manage your personal and professional life even now? That would be great inspiration for a lot of the people over here who would be inspired by your story, actually.
Okay. So, my father was a first-generation entrepreneur. So to me, while I worked, in professional roles in banking for a long time, entrepreneurship was not something that was new to me. I'd seen, the difficulties, the ups and downs. But the decision actually, and the space that I worked in, I used to work in Citi at that time, and I used to run the digital business of Citi. And that used to be actually, it worked with a lot of startups, seen them do extremely well. So it was really quite clear to me that I like this cusp of business and technology and I enjoy it. So always wanted to do a startup. So that was never a question, wanted to work in an environment with people like that. My husband also decided to go entrepreneurial. So what was clear to us was both of us can't take the risk at the same time. We have 2 kids. And so I timed it in a manner that, once he was doing well, we knew that we didn't have to worry about bills and quality of life is when I decided to take the plunge. So that's really how I got into entrepreneurship. Now, a lot of people keep talking about balance. I really think work-life balance or being a woman, man or woman, balance is not something that's measured in units of per day, per hour. I think balance is seen as over a period of time is there balance in whatever one does. So in that, I find that there are phases in my life when family took priority, when there are phases in life when work took absolute priority. But it's really to look at it in longer stretches of time and see whether eventually am I able to balance what I want to do with my priorities. And I think having a very strong ecosystem, it helped a lot that we opted to stay in Chennai. And I had family around to take care when my kids were young. I think some of those decisions were really serendipitous. really wasn't necessarily planned, but it kind of helped to have extended family around to watch for.
Thank you. Prem, so basically, today, should an entrepreneur quit his job for it to get funded? Is there, can a person be working part-time and would you still fund him? At what point would you expect that person to quit his job, if at all so?
I think I'll give the answer with my own experience. So I was actually working when I was building Pontac for the first 2.5 years, wherein, just like all the other sacrifices and the other people in the dais have mentioned, I will leave on a Monday morning at 3 o'clock to Unterforing, which is a village outside Munich. And then I come back only on Friday or Thursday late night or Friday early morning. So I had a day job which runs from 6 o'clock in the morning until 4 o'clock, and then I have my evening job which is building Pontac from 4:30 or 5 in the evening until about wee hours of the next day. So that's how it is built. So the answer to your question is it's always about the aspiration of the founder. It's always about, or the founders, it's about where they want to get to and what kind of attitude and aptitude are they willing to kind of demonstrate to be able to deliver on the overall thesis or their purpose that they want to kind of achieve. And it's also about where they see in terms of very clear demarcation as to when they want to come full time. Obviously, not everybody is having the ability to be financially savvy on day one, and they all have to take care of the family. So we understand and appreciate that. So it's always about working with the founders to be able to understand what can we do to be able to come to that particular boundary where you're able to take that plunge full time, which does not actually trip you onto something which is going to actually affect the family and the quality of life of the family, because at the end of the day, as much as there is purpose, everybody is doing it for the family. So the answer is, it's a mixed bag. It always boils down to the founder or the founders in terms of where they want to get to and at what point in time and where they are today.
Great. Hey, Shrikant, you have a gray hair now and you're starting a company and, you're a startup right now. And how did your family take it? Because, this must be a hard decision at this age, if you like, right?
Not really, because I've been in water, I think, some 40 years ago in the distribution system. Then I moved on. I'm actually a technical analyst also. So I was in the stock markets for a while. And then I moved on to the futures market, the commodity market, and I, in fact, was instrumental in setting up a futures exchange. So I've done all that kind of stuff, and I've specialized in sugar. I used to set up risk management desks for the sugar industry. So starting another area was not much of a surprise for anybody who knew me. And it's fun because, like he said, you learn so much every day, and every day is a challenge. But it's good fun. I mean, the sense like the challenges are really interesting because you are meeting different people. You're meeting people who have got different requirements, and then you feel very good when you actually are able to satisfy their needs in some way or the other and come out with a solution. So that's something that really drives us. But more important, of course, that I don't know whether I'm lucky or the fact that I chose the right guys. Having ideas is one thing. Being able to translate it into action is something else. And for that, you need good guys to work with you. And it's okay, it's been 3 years now, but I've got a fantastic team of guys. I just have to tell them something of what I feel can be done, and it gets translated. So that way it's good. So it's been good.
Excellent. Vikesh, so is it important to have a co-founder? Should if I have just me alone, can I start a company, or do you expect a team to come together? And if so, how would they come together in that ecosystem?
I believe that it's very hard. I mean, like, you can start a startup on your own, but it's very hard to, manage everything. And I personally believe it's better to have a co-founder and share half of your work with him, because time is almost everything for a startup, like right time, right place. And when you're a single founder, you might find it really hard to go through the process. When you have a co-founder, you kind of have someone to share your ideas, your views as well, which keeps you going. And even though you might be really good at what you do, there will be points where you will need some kind of a support or someone thinking just like you. And I believe that's where the co-founder comes in.
Great. So I am I'm a single founder myself. So this is my third startup. So what I found out was it is not, today is very difficult because you usually look at your own friend circles or people you know, right? And they may not be the ideal fit to be a co-founder. So I took a decision because of my past experience of having burnt my finger practically in identifying such co-founders. I figured out, you know what, I will do it myself and I will hire people who would rather fit the job rather than me looking for co-founders and causing a rift. Most often I find that there is a lot of rift between the founders only because of that. And that's just my experience, of course. And Arun, so what we wanted to know is, you know, how do people get their early customers, right? You must have evaluated so many startups right now. You know, 1,500 startups have now applied to you. How does one go about getting the early customers, and do they give it free in the initial stages? You know, how does one go about getting the early customers, even if they're trying to solve a problem?
Yeah, I think, I mean, you can broadly split it into two different questions, I guess. So if you are a B2B company where your primary customers and other enterprise, then the approach drastically changes to what you would go through in order to build trust with, let's just say, a D2C company, right? A D2C company is just any online brand that we buy from. So when it comes to D2C, when it comes to consumer-focused segment, there it's about creating consistency in the experience and first be able to allow the customer to first enjoy what the product is and then be able to have consistency, or let's just say come back to you again. So a lot of us actually have this idea that how do I make the customer buy once, and we're all in love with the product that we create, and at some level the idea gets to a point where we love the product too much that we actually don't criticize our own product. And the second point becomes that once you reach the customer, why does he have to come back to you? And the moment he comes back to you, are you able to give him the same customer experience? Is kind of the broad idea with which D2C companies are approaching the game today. And of course, the brand plays a major role. It is a pivotal role because at the end of the day, what do you associate yourself with? Are you aspirational? Are you buying a product in order to be a part of something? Are you buying a product in order to just enjoy the product? All of this plays into how you build a brand. But when it comes to B2B, I think we have the experts here who've been funding B2B startups here. So I think they're in a better position to answer, but from very little experience that I've had with them, I can say that your technical prowess in terms of what you're solving, I think is central to the idea. Because when it comes to something, let's just say like a technology product, for example, one of the portfolio companies that 8X have invested into, where they are working on an impact level where they are trying to replace manual scavenging. The company's name is called Solinas, if I'm right. So there, the problem itself is much more important, and making sure that that problem being solved creates a large enough rift in the entire supply chain, I think plays a huge role. So this is at least my understanding of how things work here.
Great. Hey, Gauri, how did you get your early customers? And you are also in the B2C space in some sense at the end of the day. And what is the cost of acquisition for a B2C space? And what do you think about this? How does one build that entire ecosystem in your experience?
The question is about customer acquisitions?
Early customer acquisitions, and how did you get your early customers? And how do you acquire customers in a B2C space right now?
Right. So, initially, I think, so we are a digital platform. So, we built out our website. We made sure that it was search engine optimized. You have traffic coming in. And then because we were solving for a specific need for people who got rejected for loans, we started putting out questions in Quora and a bunch of places so that people discovered us. Once we kind of figured out what the product market fit was, and we kind of got a good grip of how to service them, we started looking at how do I expand this to other channels. So we started doing actively, besides search optimization, we started working with affiliate partners. We started advertising on some of the larger tech platforms, Google, Meta, all of that. And once some of that got stabilized and kind of the unit economics we got comfortable with, we started working actively with partnerships and alliances. You know, people would kind of, people owning large consumer bases, how they would send traffic to us. Then we started going down the deeper system of, can I work with offline partners who are working with similar consumer bases and start solving? So that entire ecosystem got built over a period of time.
Perfect. Prem, in your opinion, which is a better business model which would be much more easily to fund or grow? B2B, B2C versus B2B2C. Which one of these ecosystems, have you seen success rates? I mean, based upon your experience of success rates, which one of this ecosystem looks better?
You're asking a very biased person who's extremely biased only with B2B or B2B2C. So the answer is going to be B2B or B2B2C. The reason is purely because I don't understand B2C. That's the realism. But having said that, B2B and B2B2C, we picked, I'll answer the question slightly differently, why we picked about B2B or B2B2C is primarily because at the end of the day, if you're selling a product or a service to a client, the client is essentially answerable to their shareholders, be it a listed company or unlisted company. And the derivation of the success or the happiness of the shareholders is derived out of the earnings per share or the profit of the company. So net, when a particular company we are funding, as long as they're able to contribute to either an increase to revenue of the end client or a decrease in cost of the end client, that helps address their profitability or the earnings per share or shareholder value. Now, notwithstanding that, the other reason, so as long as they're delivering that, we are okay. But the most important thing, the reason why we would say is B2B or B2B2C is because as much as the gestational period of closure is longer, spanning anywhere from 8 months to even 18 months to 24 months in some cases, the stickiness of such a product in the market is for longer. That gives stability to the company and the unit economics of the company. And that allows for the company to be able to plan for current as well as for the future. So hence B2B or B2B2C. Thank you.
Great. Mr. Subramaniam, you actually ran a company which was into B2B2C, if you think about it, right? Because you had to have people. So how did you get your, number of, you were in HR business, which means you need to procure resumes on one side and then help the clients on the other side also match these two people in a very different way. So how did you go about that and how did you build that entire ecosystem from yourself, in your experience?
It is all need-based, right? So we started as a training company. The trained resources has to be placed somewhere. We stepped into contract staffing, which is early 97. And then the large companies started building their companies here, like TCS, Infosys. And volume was their game. They do not want to hire somebody because they want to test and hire, because they do not know they are going to get the project. Automatically, I've been in the bandwagon. The business grew for 26 years. So not even a single year we were down. I did not do anything. Recruiters did most of the job. I was there to manage the recruiters' aspiration. That's all we did. And because we've been in the bandwagon, so we actually grew every year. We only managed the cash flows and finance, and because the ecosystem threw us challenges like you have to pay service tax and you have to pay GST, then every time PF, ESI, that is the only thing we keep managing. All the rest customers manage for us. Anyway, recruiters are supplied. So that is the easiest thing to answer. It is not planning was in the finances. So now I really relish any company which I invest. If the entrepreneur does not manage the finance well, or they do not understand, I spend lots of time with them to make them understand that. So that was one of the success which we had. So I thought that should be the learning for everyone. Most of the business people, I can bet, they would not have seen the P&L, what their business, they would not have seen the P&L of their business till today, after running 20 years their company. So I only tend to say that, please go and look at your health. Your P&L is a key. Balance sheet is a key. Every answer rests there. The strategy starts from there only.
Great, sir. Now, Srikanth, I mean, you are selling to associations, basically, right? I mean, you have to go to these apartment associations. You have to go to these industries and go. It's literally a door-to-door, practically a model if you think about it. So how do you acquire customers?
So it's the
And how painful is it?
if you put the association part of it into the B2C area, it's painful. In fact, we kind of avoid that area. We're very happy with the B2B. See, what happens in the B2B is invariably you have a technical person out there and they have a requirement which they actually need a service. So they're very keen on closing it, making sure that it conforms to what they require, and they're ready to pay for it. In the B2C, selling the concept is one job, getting them to agree on the price is another job, and then the after-sale service is a pain. So what happens is that, and water is very sensitive. So when it comes to the B2B, you're straight away addressing the pain points of a corporate or an industry or whatever it is, and it's there in data. It straight away comes out to your handset or your laptop. So unless those numbers stop coming or something goes wrong, there are no complaints. And the other thing is that we don't really have a very major marketing team, because invariably when you go to one industry or you go to one company, they automatically refer you to the rest. You just have to get into one industrial complex and one SIDCO area, and each engineer knows the other one who's in the place. So you get referred that way.
Great. Keep the mic.
Yeah.
So in my own business, talking about my own problem statement, in fact, believe it or not, among all the startups and all the things that I've done so far, this has been the easiest for me, honestly speaking, because everybody has a problem. Everybody has the problem of, guys accepting offer letters, not joining, moonlighting, fraud. Every company has got this problem. So for me, it has been actually, I would say, the easiest business I've ever done, because I was able to go convince all these customers, and the problem statement was very obvious, right? So so finding such a problem statement is very critical, if you ask me, right? So moving on to the next topic of AI, right? So AI is a hot topic, and deep tech is something that you guys look at very heavily. What do you think is the new AI market looking like, and what are the kinds of companies that you've come across in the AI space right now?
AI is a pretty big space, and also you would have heard about Sam Altman wanting $7 trillion. They want to fund their startup, $7 trillion, and which is very outrageous for many of the VCs. And the market is pretty big, and in India as well, there are a lot of startups coming up using the AI term. And previously they were, making fine-tuned models, and now they just name it AI, right? There are a lot of AI startups out of India for specific use cases. And I believe that AI will be a tool across all the industries, at least in the upcoming years. And the adoption rate for AI is pretty high, because people actually see the value in it. And in India itself, this one startup called Build AI comes out of Kerala, has been growing big. And then you would have found out that, Ola, Bhavesh is also starting AI startup, which is one of the fastest unicorn in India. And also there's a lot of growth in the sector. And you could see that a lot of these companies would be acquired or growing pretty big in the next decade. And yeah, that's the growth rate.
Great, thank you. Arun, nowadays AI seems to be a buzzword, literally a buzzword. Every Tom, Dick and Harry, just like at one point e-commerce was a fad, if you like. AI is now the new fad, if you like. Now, how is it going to, first of all, is it going to impact jobs, number one? Number two, in your, the likelihood of a company, the word that if they use AI, the likelihood of them getting funded, is it that much higher in your experience? And what do you see that entire AI trend?
So, to maybe add some positivity to the conversation on AI, AI per se is primarily looked as a tool at this point in time, and at least in India, at least from my view on it, I don't see a lot of native AI coming in today. So most of the AI that is, most of the startups that are using AI are using either your Bard or your Chat GPTs, where there's a specialization built on top of it, where these models are built on iterations of what you do. So the moment they get into a particular specialized area, they provide a better value add there. So one of the things that we are seeing now is personalization when it comes to AI, where the medical field, where it talks about brand building, they're talking about how can I look at your data and how can I cater my service or bring my service to you in such a way that it sounds very tailor-made for you. So this seems to be a theme that I see currently. And when it comes to AI as a technology in itself, I think right now it's at a stage where it's being built around and it's used as a tool. So it's like saying that, maybe I think 15 years back, cloud computing was the topic, where they said, okay, the sky is the limit. But now I think with AI, what we are seeing is, I would say, very, very, very nascent stage. And I think what we could do there will really start blowing out when we start doing our own native AI at this point in time.
Great. Hey, Gauri, in case you had to start your company now, right? Would you have been funded if you didn't have a AI tool?
Well, I really, okay, first of all, let me break this into two parts, okay? So, first part, with AI be the reason for me to get funded? B, will I get funded? They are different topics, right? We shouldn't confuse the two. Now, or as far as AI is concerned, I think it's a good tool. I think it's a great way to run a business efficiently. So there is no question. If any company has the mindset of being efficiently run and to be sharp about how they execute, AI, BI, CI, DI, whatever is the tool, I'd want an entrepreneur or a founder who has that mindset to say, I want to do something and I want to do it in the best way possible. So no question about it. Second part is, will I get funded? Hopefully I have enough credibility that I will get funded.
No, had you started your company now, and would the bare minimum be having an AI tool within?
I don't think so. If I'm sure the venture capital folks don't start saying, okay, I will start evaluating this company and see whether they have AI, right? They start with what is the mindset, what's the problem you're solving for. If AI is the tool, so be it. If a lathe machine is the tool, so be it. It's an enabler, is the way I see it.
Great answer. Prem, today, for example, we know that, will it in the future, in the foreseeable future, do you see AI being a bare minimum, right? Because every company, as I'm not talking about today, but probably 5 years, 10 years. In fact, I had predicted at one point, starting a startup by in itself will become a difficult task. Because the tools would have been there so much, that we have evolved so much, that everybody would have thought about everything else, and bare minimum will be so expensive to start. So today you can bootstrap a company with the money that you have, create a website and do all that stuff. But if AI is the bare minimum to start a particular company, that becomes that much more expensive, right? So do you think that something like this is a possibility? Where do you see this going?
So is your question whether is AI a bare minimum for starting a company? The answer is no.
In the future?
In the future, the answer is no. Because you have technology businesses versus non-tech businesses, right? So if you talk about technology businesses, it becomes a part and parcel, just like how website is there today, which was previously not, website was not there about 20, 30 years back, and now it has become a very basic requirement. However, when you go into a non-conventional business, for example, let's take KPN as an example, Kovai Padamuthal Nilayam as an example. They've grown significantly with about 60 plus retail outlets across, and they were recently valued about 900 crores. Where is the need for AI? There could be probably having AI in their supply chain management, not at the core or front of it. So it depends upon what your sector of focus is and where in the value chain of your enterprise do you require AI to make effective decisions or actionable insights for you, and also predictive analytics. So it varies from a case-by-case basis, to be honest. So if I were a VC and I'm going to say if I only fund companies with AI, the answer is no, because we do fund companies with graphene technology, which is a fuel chemistry. for batteries. We do invest in companies which retrofit three-wheeler tuk-tuks. So there is no AI there. There doesn't need to be. So it's always about the opportunity and where you will see magnitude of growth.
Great. Mr. Subramanian, today we see that there is a lot of trend towards, Chaiwala, there is Kovai Paramudri Cholai. There are so many now offline companies also getting funded quite a bit, and that's a good trend, I think. Manufacturing versus offline versus online. Where do you see this trend? What kind of, let's say somebody wants to start a offline company, like a Kovai Paramudri Cholai as an example. Today I can come to you for a tech and get funded, even though it might be just as a concept stage. But can something like that be done towards an offline store or a manufacturing unit and so on and so forth? Is there something like that that's going to happen? What is your opinion, sir?
See, there are questions in two parts. One is offline businesses, yes, as he was mentioning. There are organizations which is offline. 50% of my investment is offline. I have investment on farm to home. I have investment on eggs. I have, so there are companies which is offline, they are also getting funded. The first thing which you asked, like Paramudri Cholai, that private equity was very active long back. It is not now. Private equity at that level of investment where you invest 300, 500 crore minimum, that was active really long back. They would have termed us differently. Any company which is going to IPO, they would have got funded by this private equity at least 3-4 years before. So the private equity was active long back. Only the VCs and so-called startup which is getting funded is now very active. It doesn't matter they are in manufacturing, right? In IIT we have done some investments only in manufacturing, but their possibility of scaling their operations without organically investing is possible. So then these kind of funds come inside, because the main goal for us to get exit, not investment. So because we handle with others' money, right? If it is a personal money, I just put it and forget it. Even if they don't come back, I don't care. But if I handle others' money, then I have to look at exit. That is the pressure which start building up when you go to VC. It is better to go to angel, get the money so they don't follow you after 3 years. So they forget it.
Great. In your current ecosystem, if you look at it, you have 1,500 startups which have applied for funding over there. Is there any startup over there which says, I have an idea in a manufacturing sector or this thing, and I have applied for funding, but just a concept stage, but not in they have not evolved beyond it, as an example? I mean, is that something, when should they seek funding? Let's say, for example, if I want to start a manufacturing in an offline store like a Paramudri Cholai, but I'm just starting off, when should they apply for funding when you're in your ecosystem?
So in my previous role, I was a part of a manufacturing business where we were doing M&As there. I would say when it comes to anything in terms of being funded, I would go back to Prem's and Sir's argument in terms of returns, right? Because at the end of the day, a company's journey at the end of the day has to reflect either on the top line at some level, or let's just say there has to be a business model behind it, right? So let's just say 3 years back when the funding was abundant, the VCs did not have an issue closing their funds, where money was not the issue, where the mobilization of capital was not the issue, ideas also get funded is what we've seen. But today, when we speak to a lot of the investors, and even in our previous capacity, I think some semblance of having a stable business model, or at least a clarity in the business model per se, maybe the business model might not have evolved until today, but at least this is what I'm going to do in 5 years, this is what I'm going to do in 3 years, has to come from the founder. And when it's at a concept stage, I don't think the founder also knows that concrete, at a concrete level, where he knows this is what I'm going to do and this is how I'm going to make money. So at this point in time, at least in this current state of affairs, I don't think they're going to have an easy time being funded. The second thing is, of course, the gestation period. So how long does it take to scale up your business depends on your business model. If there's a lot of assets involved, if there's a lot of gestation towards you growing your company, you growing your top line, then again, there's a problem. So I think these two factors play a major role in how they're being funded.
Great. Prem, do you think that if Elon Musk was in India, would he have been successful?
He would first need to understand the culture of India. Um, because in my view, we are so price sensitive that we like to walk into a Louis Vuitton shop, ask for a buy one, get one free and a 20% discount on top. Right? So first of all, he needs to understand the culture, and then Elon Musk would have been called ALA Musk, right, in my view. So understanding the culture and price sensitivity is very important. And also understanding the way in which Indian people workforce works is also important, right? He can demand a lot of time and long hours from the Western world, but India as a culture is very diverse. We spend a lot of time with the family, and there's a lot of nuances that need to be taken into account. So understanding the workforce is important. So if he understood the culture, yes. If he understood the discount factor, yes. If not, it'd be a struggle.
Great. Sir, today, because if you look at Tesla or any of these, this required huge amounts of funding from, we're talking about long gestation periods, SpaceX, for example, so on and so forth. I mean, there are nowadays, there is a company which got funded in America, which actually requires, they said that the product itself will take 10 years for it to come out. Literally 10 years for it to come out. And they just literally a concept stage practically, right? Do VCs in India have that kind of patience and patient capital to be able to put that kind of thing in the ecosystem? For you to actually say, you know what, this is a fantastic idea, but it's not going to be today. But can that patient capital happen in India?
Now I'll again divide this question. You asked about Elon Musk, right? The government support. Elon Musk picks up areas where there is a huge money available in the government. He picks up that area. He is a fantastic executor. And he executes that because 30 to 40% of the money comes from the government. India would have been a superpower if the same chip industry, they would have thought about 30 years back, we had that opportunity before Taiwan was actually successful. We would have been, by now, we would have been a supplier for chips across the globe. Right? So the difference is, one is the culture, the second is the government intention to invest such large amount. You see Adani now developing, right? Leave away the politics. Adani has taken over Israel's shipyard, right? So we are also capable of executing. We are showing that when there is some push from the government and the support from the government. What is the second question which you asked?
The patient capital.
Huh?
Patient capital.
Okay, the VCs, if you really look at VC ecosystem, last 5 years only we see Indian money coming into this ecosystem. Till then it was not Indian money, it is all US based money which came in. And that was the large money which was there. Now only you will hear $1 billion funds which are available in India. And mostly, I do not know whether most of the funds which were operating from US which had the company here, now they are registering in India because they want to tap into India money. Go back and look at in Tamil Nadu how many people have invested into VC funds. It is very, they don't invest, right? All the entrepreneurs who have been very, very successful, all the industrial group which is very successful, they do not have the funds for their investments into startup. The third question which you asked, is there a companies which is long gestation period getting funded? Yes. You see so many space techs, all these are very, very long gestation period. I myself been following one space tech which I got funding from SCST, which is like they will take another 5-6 years minimum to get the product out. But we got funded, everybody in the government is excited.
Excellent. Great, sir. So last question, last answer.
I just want to add on to that point, as much as Mr. MBS was talking about long gestation periods, VCs do have the propensity to fund companies with long gestational periods. However, the current SEBI regulations do not allow us to have any fund for more than 10 years, which means we have to close it.
Got it.
So that's driven by a regulation as well.
Great. So this is the last question for quick, just 2 to 3 sentences maximum. Today people are putting money in stock markets, people are putting money in different ecosystems, commodities and so on and so forth. If people over here want to invest in a fund like yours, what kind of returns can they expect, and what kind of investors can put money into your organization?
I have a disclaimer. I cannot state it how much returns they will get. In a fund like this, it's called as alternate investment fund. Many of the family offices are investing through it. 10% of their exposure to the investments can be in alternate investment fund. The expectation what we have, personally we have made 80% IRR. Expectation what we have is 25% IRR if it is in fund level. So that is how it looks like.
Great.
I will agree. So we are delivering currently at anywhere between 35 to 45% IRR on a aggregated basis. Yeah, that's what we do.
Great. Hey, that's
I
about
have only
the time.
one, I'd like to add some things, Dakar. As an entrepreneur, funding is a means to an end. Sometimes I feel in the conversation itself, it seems to be that the act of raising funding is an end in itself, very far from it, right? I think funding gives access to capital, which multiplies growth. But with funding comes its share of, responsibilities, like giving an exit, expecting to run as fast as the investors' IRR expectations are. So my only point of view as an entrepreneur is, if you're a business and you're looking to build it, have clarity on what you're seeking to build, and funding is, you could choose to take it, not choose to take it, it's an option.
Absolutely, brilliant. Hey, that's about the time that we have. The organizers have told us to close the chapter on this. But thank you all panelists. I really appreciate all of you coming here and being a part of this wonderful session. A quick round of applause for the panelists, please. Thank you very much. You've been a wonderful audience.
Can we just have a group photo, please? I now request Lieutenant Hari Prakash of RC Chennai IT City to say a note of thanks.
Good afternoon. Standing before the audience and the lunch, what a fantastic session today it was. Beautiful and very enlightening. Thank you, Sudhakar, for moderating it so well. I felt I was standing in front of a Shark Tank group, staying there, and every time in the Shark Tank they ended with the venture capitalists say that, and for this reason I'm out. But at least today, I would say, for this reason, I'm in. And it's been so exciting. Thank you, Prem. You mentioned about attitude, vision, and passion. Thank you, Gauri. You mentioned about work-life balance and serendipity. Thank you, Mr. Subramaniam. You are really talking about the fear of the unknown. And you wanted us to look deep into our P&L as a health check. Thank you, Srikanth. Of Go Water, I'm remembering my apartment complex where I see these small gadgets fit for checking the water. You said, in spite of the gray hair, you have still been successful. Choose the right guys. Thanks, Vikesh. I think you really delved into the deep tech and disruptive technology and delving into the artificial intelligence. Thanks, Arun Karthik, the investment head of Tamira. I mean, you really gave a different vibe to the whole fact of MSMEs and entrepreneurship. And finally, ending the whole session with AI. AI is going to be there. We have to adopt it. And thanks all for the wonderful session today. Thank you.